India's top lender, SBI, reported very healthy set of numbers for the quarter ended March 2024. SBI reported a net profit of 20,698 crore in Q4, registering a year-on-year growth of 24%, buoyed by robust demand for loans. The figure was significantly ahead of analyst estimates that pegged net profit to come in at about 13,400 crore. The lender's net interest income, which is the difference between interest earned and interest paid, jumped 3.1% YOY to 41,655 crore versus the expectations of a marginal 0.7% rise. Furthermore, SBI's gross non-performing assets reduced by 54 basis points to 2.24% from 2.78% last year, and net NPA declined by 10 basis points to 2.57% this time around from 0.67% in the previous quarter of the last financial year. What's more impressive is that the difference between gross and net NPA is at its smallest point in 36 quarters, which indicates strong provisioning and improving asset quality. The state-run lenders' loan growth was strong in the March quarter, and it clocked one of the best growth in over 8 quarters. Meanwhile, provisions nearly halved to 1,609 crore from 3,315 crore in the year-ago period. SBI has also declared a dividend of Rs 13.7 per share for FY24. As for the stock, right after the results were announced, the stock surged as much as 3% to hit a fresh record high. However, it paired gains and closed about 1% higher in a falling market. Remember, the market had corrected, it corrected by about 1.5%, but SBI still managed to close in the green with some modest gains. Aamar, sir, coming to you. What's your assessment of SBI's Q4 report card, and what should investors do post earnings, considering that the stock has been a good, or at least has been on a good run in the last 5-6 months?
Yeah, I would say if you look at the stock year till date is up by almost 27-28%. So the returns have been, I would say, stupendous or spectacular for investors who had the courage and the patience to hold on to SBI. Because if you look at the banking space, the private sector is dominated by HDFC Bank, ICICI, Axis, Kotak. Some of these on the public sector, it's primarily the SBI, and then you have the other banks. So SBI plays a very important role, and it will continue to play a very important role in the overall Indian banking scheme of things. And looking at the numbers also, if you look at the quarterly numbers, they've in terms of the net profit, that's exceeded expectations. If you look at the gross NPA as well as the net NPA, that also has marginally declined. So the gross NPA came at around 2.24 versus 2.78 for the same quarter last year. And net NPA also has come down, and also the bank has witnessed strong loan growth. So if you look at its clock, one of the best growths in the last 8 quarters. So having said that, if you look at the company or the bank per se, we see that current levels we are witnessing some sort of consolidation, some sort of profit booking. The long-term trend definitely remains positive, but I wouldn't recommend fresh entry at the current levels. But those who are long, they can look at booking at least part profits and trading the rest. Because if you look at the stock, we see that somewhere on the downside, the stock has got strong support zone around the 720, 750 zone. So, so one can look at booking part profits and trading the balance below this level.